Hello, my name is John Chapman. This video podcast we look at project accounting for our business solution projects. Now we look at three things. We look at the types of budget heading, we'll have a look at the 5 project accounting values that we need to understand, and we'll talk about profiling the budget. And then to bring those 3 items together, we'll have a look at a small worked example on how we track progress. Our project budget is broken down into 4 areas. The first relates to software and hardware. What's the application software, database software and infrastructure we need in place? The second is around the provision of services. Do we need to buy in project management and consultancy to assist with the delivery of the system? The third is risk. On that throw of the dice something happens and we need to then spend money to deal with risks that have manifested themselves. The fourth area is contingency. We set aside a bit of money in case we find things that we want to implement during the project that we haven't budgeted for but are worthwhile to do. In addition to the one-off costs that we will incur during startup, there's probably going to be 2 other areas we need to consider. The software maintenance is the annual amount that we'll pay for a help desk and for the enhancement program for the system, and hardware maintenance to keep our servers and systems going should there be issues during the life of the use of the system. Now these are probably annual charges that we'll receive every year, and so we need to add this into our total cost of ownership. There are 5 project values we need to understand, and these are based upon the earned value management methods. The first one is, what is our budget at complete? How much money have we got to spend to deliver the project? And then as we go through the project, we'll track the actual costs, what money have we spent, up to the point in time that we're doing our reporting. Now this is something that we need to track both within a stage if you're running prints and also overall for the whole project. The next thing we need to look at is what is our estimate to complete. What's the money we need to spend over what period of time to complete the implementation? Now with these 3 values we can calculate our last 2. The first one is our estimate at complete, and our estimate at complete is a calculation of the actual cost that we've already incurred plus the estimate to complete. And then what we also want to know is what's our variance at complete. Is there a difference between our budget and our estimate at complete? And traditionally we have positive variance is good and a negative variance is not so good. Now we should take our total budget at complete and profile it across the stages of the project. So we have stage budgets, and the stage budget should be based on what we think is our estimate to complete that stage. So then we have our budget split between a total budget and individual stage budgets. Now you may recall we looked at risk and contingency. We'll keep these as separate budget headings. So we'll have the budget for risk and the budget for contingency, and when we need to call upon them we can then move them into the appropriate stage or stages. During project delivery we need to track the actual cost of work performed, and as we're running the project we calculate our estimate to complete, and it's from these 2 values that we can then calculate the estimate at complete. And as you can see in the example, we spent all the budget at complete for that stage, and we still have an estimate to complete of £5,000 to give us an estimate at complete of £40,000. When we take this and compare it to our budget, we have a negative variance of £5,000. And perhaps this is caused by risk that's come into the project, and we need to use our risk budget to cover this overspend. So the key points we need to remember when we're doing our project accounting. The first is, what is our budget at complete? How much money have we got to spend? The second is that we must profile the budget across the project, so we look at it by each stage. Then as we do the work, we track the actual cost, the money we spent on software and hardware, on services to deliver. And then we have to do our estimate to complete. What's the work coming up by stage to complete that stage and to complete the project? And then from that we can calculate the estimate at complete, because that's an algorithm of the actual cost plus the estimates to complete. And finally we can then work out the variance at complete, and we want to know whether we've got a positive or negative variance. Or are we going to come in on budget, which would be great. So for each Prince 2 stage, we must know the value and current status of these, because without them we can't track tolerance, and we don't know if we're out of tolerance and have to go back to the project board. My name's John Chapman. I hope you found this of interest. If you'd like to discuss more about project accounting, please give us a call. Goodbye.